qualified stock option. Well, if that's you, then this is the best video for you. We're going to give you a quick rundown of what non-qualified stock options are, the terms you need to know, how to determine when to buy them, what's the tax implications of it. We're going to go through all that stuff today. So let's dive right in. As non-qualified stock options are basically a form of compensation for you. That's it. The difference is you have control over when you get to buy this company's stock. So a company can say, we're going to give you the ability to buy options at a set price for now to the next whatever amount of time. So here's what you need to know. So the first term you need to know is called the grant date, right? And that's when they say, okay, we are going to give you X amount of options. It determines the date, and everything else is going to be based off this date. So after that, you have what's called a vesting date, right? And generally, it's a year. So you get granted the options, and then you wait 1 year, and then maybe every year for the next few years, you get more opportunity to buy stock options. So vest is when actually you get to purchase the company stock. So that's when you get in control over it. The next thing is exercise. This, unlike Richard Simmons, is not actually working out. It's when you get to actually say, okay, I'm going to physically go ahead and buy this company stock. Okay, so that's exercising it. The last part is expire. Okay, and that is when, after a certain amount of time, if you decide to never buy it, you don't get to buy the stock anymore. The opportunity to buy stock, potentially at a discount, goes away. So most plans have a 10-year expiration date. So between the grant date and expiration date is typically a 10-year window. So you have 10 years to typically buy your company stock. Okay. So what happens over time is you're going to have your grant date here, year 1, let's say, right? And year 10, here's your expiration date. So your stock price may stay basically the same. So let's say it's, $50 a share you can buy it for. And hopefully what may happen with the stock price is generally maybe something like this, right? But what this difference between the stock price and your grant price is something called the spread. And that is basically the difference. So let's say it's $100 here. You have a $50 stock. The spread there would be, for all you math wizards, $50, right? So that means you are basically, doubling your money because you were able to buy a $100 stock for $50. That's a pretty good deal. So that's maybe why a lot of companies will do this, because they give the ability to buy stock at a discount. Hopefully the stock price goes up over a 10-year span. If not, you might want to look at a new company because it may have something to say about management. But let's dive into an actual client's stock option to kind of show you exactly what I mean and what we're looking at. So here's kind of all the terms here. We have the grant date, expiration date, the strike price, so what you're buying the shares for, how many shares are granted, what are considered vested, what are considered unvested based on the schedule, how many are currently vested, and what's the total unvested, and what's the total amount of shares you have. So these are all important numbers that you need to determine when you're determining, okay, what am I going to exercise my stock? So you'll see here as an example, the stock grant date for this one was 3/3/2022. So there's your 10-year window here. They'll expire in 2032. At any point from the vesting date to the expiration date, you can buy this company share at $50. So you would have the ability to buy up to 2,500 shares plus a little bit extra at $50 a share. Right? You can either exercise all of that, none of that, whatever the stock price is. So let's say it's up to $75 a share, right? You're paying the 2,500 times the $50, or you can just buy 10 shares if you want. You don't have to buy all of them. When the price is $75, you're just up $25 every share. So you made some good money there, okay? And same thing here. Here's your new grant date. Here's your expiration date. And typically every year you're going to get, one of these grant notices. So the real key is determining when do I exercise the shares and what's the tax implication of that. So in terms of taxes, there's going to be a few things that happen. Okay, so when the shares vest, are you taxed? Not necessarily. I'm just going to put no there, not at vesting date. So you can vest right now and you don't automatically get taxed on it. Just the sheer act of vesting does not trigger a taxable event. What does, though, is if you decide to exercise. Right? So let's use this example up here. You bought just one share, right? I'm going to exercise one share. It's $75. Current value, the grant price is $50. So I have a gain of $25. So I would pay taxes on $25. And this is an income tax rate. So basically the IRS is saying the economic benefit you're getting is $25 from this transaction. So you will pay income taxes on this $25. Now that you have the price at $75, let's say you decide to hold it for a while and sell it. Okay, here's two options here. Let's say you sell it for in less than a year. You are going to pay income tax rates on the difference. So your cost basis is not going to be $50. It's going to be $50 plus whatever taxes you paid here. So if it goes up to 100, you're going to pay a little bit more in taxes. If it, let's say, drops down, you're going to pay a little less taxes. If it goes below your cost basis, you're not paying any taxes. You can even realize a loss there too. If you hold it for greater than 1 year, you're paying capital gains rates, which for most people will be 15%. For a chunk of you, maybe 20%. Could be zero depending on your income, and there could be some additional taxes involved depending on what your overall income is. But generally, you're gonna pay some taxes on this exercise because you are getting some kind of benefit from it. And this is where it becomes really important to say, okay, when do I exercise? Like the simple thinking is, okay, my strike price is much lower than the current stock price. I'm gonna go ham. I'm gonna buy $2,600 basically of shares right now, but you may have a big taxable event. So you really want to look at not just what's going on with your taxes with this and with the gains, but what's going on with your total tax picture. So you really want to plan it out so where you're doing it over time. A lot of things involved are, what's the price today? What's the company's outlook? Just have a really good run up. There's a lot of factors you want to look at when it comes to exercising options. Is this something we can spread out over a couple of years? Is this something we're doing maybe in December a little bit now, and then we can wait till January to push it into 2 tax years? So those are some different things you want to be really evaluating when it comes to exercising your stock options. Plus, hey, are you going to get any more in the future? Is this a down income year? All those things you want to really want to look at when it comes to like, when do I actually exercise these? Because the one thing that I can see too is, especially executives I work with, they just get so busy. Like, the thing is, you have this 10-year window here, right? And then 10 year. And you may have all these built up stock options right here that are about to expire. It's like, oh shoot, I have such a value there. And then all of a sudden you're in year 9, and now you have to exercise all of these shares and all in 1 year into this huge tax bill. So you really want to see if you can spread it out over time, because you could reset your basis versus dumping everything in 1 year. The other thing you really need to worry about is, concentration risk. Typically, most executives are getting, an ESPP, so you can buy company stock at a discount right off the bat. You're getting, restricted stock units, so you're also getting company stock in that realm as a bonus. And then now you're getting stock options, right? Non-qualified stock options. So now you have 3 areas where just one company stock, plus they're your salary. So a lot is riding on this one company. So it may make some sense to take some of these stocks and then diversify them out to different options, whether it's a managed account, whether it's different funds, whatever makes sense for you individually should be something you look at. So non-qualified stocks can seem simple on the outset. There are a lot of factors that go into when do you exercise. You want to look at what's the health of the company, what's the stock price been doing over time, what's your individual tax situation, do you have a need for any of this stuff? One of the other things that you can do with this is you can do what's called a cashless exercise. So say, hey, look, I don't have $70,000 just lying on the sidelines right now just to buy company stock and then also pay taxes on it. You could do what's called a cashless exercise, where you actually use the value of these shares here and say, okay, instead of getting 2,569 shares in the company stock, maybe you're getting 2,200, and the other 300 plus are being used to pay taxes for you and buying the shares. So you can really use the stock to buy the own stock and also pay taxes with it. You may actually not have as many taxes at the end of the vesting schedule, but your taxes are covered and you're buying the shares with their own shares that you're granted. You don't necessarily need to have the cash available to you to buy the shares. So just to recap, some of the complex terms you need to understand are the grant date is when you get it. The vesting date is when you actually get to exercise the options. It's up to you. You typically have a 10-year window to do that. You make money when there's a difference between the stock price and the exercise price. You really want to pay attention to the tax implications of buying the shares now, holding on to it, not holding on to it. So there's the quick kind of basics outline of non-qualified stock options. Feel free to like the video. There's also other videos on restricted stock units that I encourage you to check out. I'm Derek Mazzarella with Gateway Financial Partners. I'm a certified financial planner.